you've been very critical and bearish on the dollar, which seems to be finding some firmer footing here the last couple of weeks. Is that a year-end trade of people covering their positions, or are we seeing a rebound here in the dollar?
Everybody, many people have been pessimistic on the dollar, including me. So I have been moving into more dollars. I own more dollars than I did. I think I saw you last in October. I own more dollars now than I did then. Because, you know, when everybody's on one side of the boat, invariably, you should run over to the other side for a while. So it would not surprise me if there weren't a rally in the dollar. I hope that if the rally comes, that I'm smart enough to sell the rally, whether it's next quarter or next year. I have no idea when. But it wouldn't surprise me at all to see a nice rally in the dollar.
Right, so what does that mean for your positions in gold? Last time we talked, you were very bullish on gold. Instead of gold fell, you'd be buying more of it. Are you buying it more here as it's come down from its recent high?
Not here. It's up a whole lot more.
It is up
when we spoke last. It's still up a whole lot. No, I mean I certainly do expect to buy more gold if it goes down. I'm not a very good market timer. I'm the world's worst trader in the whole world. So I have no idea when I'll buy more gold or more of anything. But the dollar will have a rally, perhaps. Gold is certainly overdue for a consolidation. I mean, it went straight up there for a while. Whenever that kind of thing happens, it's worrisome.
But you're still bullish long term on gold.
Oh no, I still own
several $1,000s per ounce. Is that
what I think I said to you last time? If I didn't, let's say it this time. I'm fully expecting gold to be at least a couple of $1,000s an ounce sometime in the next decade. But we have a long way to go in terms of time and price.
Right. So, what is your advice for the average American to protect themselves against further weakness in the dollar?
The way you protect yourself historically has always been to own real assets, whether it's gold or cotton or natural gas or whatever it happens to be. Own real things and or own currencies which are not being debased at such a rapid rate. The problem right now is most currencies worldwide are being debased at a very rapid rate. Some less than others, though. So you either own good currencies or you own real assets.
Again, this is a global problem. You're talking about not just the U.S., obviously, major economies all over the world printing massive amounts of dollars, huge deficit spending.
Yes, but some countries are in worse shape than others. Remember, America is the largest debtor nation in the history of the world. Not the largest debtor nation in the world, the largest debtor nation in the history of the world. There are many creditor nations out there. Some countries have built up huge amounts of savings for a rainy day. Now it's raining. Some of them are starting to spend that money. But the largest creditor nations in the world are all in Asia: China, Japan, Korea, Taiwan, Hong Kong, Singapore. All the money is there. So some countries are going to suffer less than others.
So what is the message of the markets are telling us, though? Whenever there's a crisis, we have the Dubai sovereign crisis, Greece being downgraded in the last couple of weeks, people flee to the dollar. Is that just a reflexive thing from they're used to the dollar being their world's reserve currency?
No, that's not why they're putting money in dollars. Usually many people are short the dollar, and that's why they have to cover. When Dubai gets into trouble, somebody's got to cover their shorts. That's what always happens. You get margin calls or redemptions, or they take away your credit lines. So you have to cover your shorts. That's all that's happening with the dollar. That's why the dollar may continue to rally, because we may have more problems. There are plenty of countries that are in trouble, and more will come to Yahoo.com's attention in the next year or two.
Right. So where do you see the greatest risk here? Because obviously the concern about sovereign risk has been put back on the table by Dubai's crisis, by concerns about Greece. Latvia is in trouble. Spain's credit outlook was downgraded this week as well.
We're overdue for a serious currency crisis. We're going to have, in my view, problems in the currency markets, either a crisis or a semi-crisis in the next year or two, because there are all these imbalances. Many countries are in a terrible shape, and historically, the only way you solve those is you have turmoil in the currency markets. Some people go bankrupt, some people start over and survive, and that's how you solve these problems. But we have many more: Argentina, Ukraine. I mean, the list goes on and on and on.
Latvia as well is another one that gets mentioned often. So do you think the U.S. is going to lose its AAA status? Is Moody's this week again saying there's no guarantee that it's going to keep it?
The U.S. doesn't have a AAA status except for people like Moody's, and we know how good they are at credit ratings. I mean, where have you been for the last 2 years? Moody's said all these subprime paper, all these tranches were AAA.
AAA, right.
I mean, please, do you pay attention to Moody's?
Well, it is interesting, though, that after all that, we are still paying attention to Moody's and S&P.
No, speak for yourself. Don't say
the
we.
Markets,
Some people may be.
Right.
Some people may be, but I'm not one of those people.
No.
I try to figure out things on my own. I
Right.
certainly make my own mistakes, but I don't make as many as Mr. Moody and Mr. S&P make.